Ladies and gentlemen, good day and welcome to the High-Tech Pipes Limited Q2 FY24 earnings conference call hosted by Phillip Capital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Vikas Singh from Phillip Capital India Private Limited. Thank you and over to you, sir.
Good morning, everyone. A warm welcome to High-Tech Pipes Limited Q2 FY24 earnings phone call. On behalf of Phillip Capital, I would like to thank management for giving us the opportunity. From the management side, we have with us Mr. Anish Bansal, full-time director and promoter, and Mr. Arun Sharma, company secretary. Without taking any much time, I would hand over the call to Mr. Anish for the opening remark. Over to you, sir.
Good morning and welcome everyone in our Q2 and H1 results ended 30th September 2023. I'm joined on the call by Mr. Arun Sharma, company secretary of the company. I hope everyone has had a chance to go through our results and investor presentation uploaded on the exchange. Now, let me take you through our financial highlights. During this quarter, we have recorded ever highest revenue from our operations of rupees 746 crores as compared to rupees 598 crores in Q2 FY23, a growth of 25% YOY. Overall revenue from operations for H1 FY24 elevated by 25% to rupees 1,388 crores from rupees 1,115 crores in H1 FY23. Sales volume increased by 18% year-on-year to 1,475 tons in Q2 FY24 as compared to 85,500 tons in Q2 FY23. Sales volume for H1 FY24 increased by 19% to 1,84,964 tons versus 1,55,567 tons in H1 FY23. That increased by 143% year-on-year to rupees 10.54 crores in Q2 FY24 as compared to rupees 4.34 crores in Q2 FY23. And 109% in H1 FY24 to rupees 18.48 crores as compared to 8.82 crores in H1 FY23. EBITDA increased by 13% to rupees 26.75 crores as against rupees 23.57 crores in Q3 FY22 and 15.83% growth to rupees 47.95 crores in H1 FY24 as compared to rupees 41.4 crores in H1 FY23. Our financial performance surpassed the previous quarter results. We witnessed a steady demand in our key demand drivers in this quarter such as Jal Jeevan Mission, 5G telecom network augmentation, bullet train project, airport and railway upgradation project, affordable housing, warehousing and solar power energy sector. These sectors are continuously aiding us in maintaining a good momentum. Our key products gained significant traction in the market and our focus on increasing the market share of value-added products help us keep ahead of the competition. Now, I would like to take you through the ongoing project developments. Our greenfield facility of large diameter pipes and solar torque tubes at Sanand, Gujarat Phase 2 is about to get commissioned. This facility will be capable of providing the complete size range of W pipes available in the segment under one roof. The commercial production is expected to start from Q3 FY24 onwards. This unit will not only enable us to penetrate in large diameter segments, city gas distribution, green energy, oil and construction sensors, but also add significant support to our sales volume and EBITDA in medium to long term. We are confident that our pan-India B2C distribution network, multiple manufacturing plants, and strong B2B clientele, we would be achieving excellent reach and regular supply of these products. We remain optimistic on demand front and aim to deliver a strong performance in the rest of the year thanks to the healthy order book and government focus on Jal Jeevan Mission and other infrastructure projects. So to sum it, we at High-Tech remain very positive on India's structural growth story. Now we can open the floor for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Jatin Damania from Swan Investment Managers. Please go ahead.
Good morning, sir, and thank you for the opportunity. So just wanted to understand, once we commission our greenfield phase 2 at 7 in next quarter, what will be our capacity and the roadmap to increase our capacity to 1 million ton, because we are targeting by 26 a 1 million ton capacity. And secondly, to continue with the same question, what will be the incremental capex that will be requiring to reach that 1 million ton?
Good morning, Mr. Jatin. Thanks a lot. Our phase 2 at Sanand, the ultimate the installed capacity will be 1,70,000 tons. Out of this, we'll be commissioning 1,20,000 tons in Q3 of this current financial year. So there are 5 lines in total, and we have started trial production of 1 line, and we'll be starting 1 line every month from this month onwards. So basically, the incremental capex for this entire project was around 100 crores, and it has been funded through internal accruals and through some equity infusion.
And so the roadmap for 1 million ton, because this 1.7 will take your installed capacity to 7.5. So from 7.5 to 1, what is the strategy, and by when can we achieve that 1 million ton installed capacity?
So from 7.5 million tons, from 0.75 million ton to 1 million ton, we'll be doing it through brownfield expansion in our Khopoli unit and our Bangalore and Secunderabad. So 3 locations will be ramping up the capacity at these 3 locations through brownfield route.
Mm-hmm.
And by FY25, we are quite optimistic and confident of achieving the same.
And the capex for the same?
Capex will be in the tune of around 125 to 150 crores.
And that will be funded through internal accruals or the warrant that we issued the last year, right?
Yeah, mix of both.
Okay. So another question, now when you look at your profile mix and the product mix, definitely we have seen a change in the value-added products which we are increasing on the year-on-year. But if you look at EBITDA per ton, which is largely hovering around 2,500 to 2,700, so are we seeing any headwinds where we are not getting an operating leverage, or when can we see a company achieving the higher numbers in terms of the operating performance?
So Jatinji, so basically, there has been a lot of steel price volatility in this H1. Steel prices are fluctuating because of the coking coal prices and caused due to the this Russia and Ukraine war. So coking coal prices have gone up. So the orders, the Jal Jeevan orders, Jal Jeevan Mission orders that we are having. So those are on fixed pricing basis. So that takes bit of toll. But nevertheless, once this Sanand phase 2 and our color-coated roofing gets well established, and this is surely to go up in the next coming quarters. Since H2 is one of the best periods for the demand and the opportunities.
So I mean, if I'm not wrong, we were guiding somewhere 5,000 when our capacity or the value-added product reaches 50%. So are we still maintaining that guidance, or probably we would see a lower numbers once we reach a 1 million ton capacity?
So once this Sanand phase 2 will be commissioned, so out of this blended should be 4,000 tons. But then certain SKUs and verticals we'll be getting 5,000 rupees per ton.
Okay, so blended EBITDA will be 4,000.
Yes, sir.
And last question from my side. So we were also working on the API grade pipelines. Because in the last interaction, you said that the line was supposed to start in Q3. So have we got any approval? What is the status on these API grade pipelines?
So, as I said, 1,20,000. So the remaining 50,000 will come from API pipes. So trials, we have started trial production of water and structural pipes of this line. So, we'll be getting the approvals, the BIS licenses and other approvals in the current quarter. And we are optimistic in 6 to 9 months period we'll be, venturing into the API pipes. Because that is the next step.
So largely we'll see a benefit of the API coming in FY25. That is also second half of FY25.
Absolutely.
And so last question, can you help us in terms of the volume guidance for 24, 25 and 26 since you are clear with the roadmap to a 1 million ton capacity?
So, this year, the total volume should be between 4.25 to 4.5 lakh tons. And next year, FY25 definitely, with the higher capacity, we'll be targeting, 5 lakh tons plus, to give a very conservative figure.
Okay. I'll come back in the queue and all the best.
Sure. Thank you.
The next question is from the line of Adesh from Motiwal AMC. Please go ahead.
Hello, sir.
Yes, good morning, Adesh.
Yes. Congratulations, ramp up. From the previous question, when it comes to EBITDA per ton, sir, we are confident of 4,000 rupees EBITDA per ton this month onwards. Or, that's an aspiration for next 12 months. So, what kind of quarterly run rate EBITDA per ton can we see as we ramp up?
So, Aditya, in Q1, there was a lot of price volatility. Prices are going up and down, taking a toll on the EBITDA. But once the prices stabilize, we are hopeful of reaching 4,000 very shortly.
Okay, and this is possible, sir, by 4Q? The exit run.
Q4.
Okay, sir. Okay. All the best, sir. That's all.
Thank you, sir.
Thank you. The next question is from the line of Darshit from Robo Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, sir, you're audible.
Yeah, hi. So, congrats on the good results. I just wanted, an idea about you've given the targets for volume, but say realization. What do you think of the realization going forward? Are they going to stabilize where they are, or are they going to increase?
So the realization, is a function of our raw material prices. Steel prices are fluctuating a lot in last 5 to 6 months. But going forward, I think the prices should settle down, and sales realization will go as our value added share that goes up. So that will happen gradually. So definitely the sales realization will be moving forward. But we'll have to see once these steel prices get settled on an annual basis.
Right. But as you say that VAP is going to increase, so margins are to increase gradually, right?
Yes, sir. That will happen gradually, quarter over quarter.
All right. And you specified about capex, but are we planning to do it all internally accrued, or are we going to take some debt?
Those are internal accruals. All the capex has been funded through internal accruals and the equity infusion.
Okay. Thank you so much, and all the best.
Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of CA Garvit Goyal from Invest Analytics. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Congrats for a good set of numbers. you mentioned to the earlier participant regarding the guidelines for FY25. That seems to be very conservative. So, is there any kind of headwind that you are expecting in FY25, or how the situation is likely to be?
Sir, the volume growth will be almost 25% from last year. So, and the kind of capacity we are currently having, I think that is the most, the ideal case situation. So once, this new capacity at Sanand Phase 2 that gets commissioned, in this quarter, we'll have a good headroom, for the next financial year. So right now, all the plants are at almost at their, peak utilization levels.
That thing I'm getting, but the thing is, you mentioned the volume should be 5 lakh tons, around 5 lakh tons in FY25. So that's why I was asking, are you expecting any kind of headwinds in that year? Because if the capacity of 1,70,000 gets commissioned by H1 FY25, then we are having a good way to grow, right? We are having a focus capacity.
We will have 7 lakh tons in our hand, and I take 75 or 70% as our utilization rate on an annualized level. So that will be approximately 5 lakh tons.
Okay, and this 70% utilization is our peak utilization, right?
Yeah, absolutely.
Can't be
for the entire sector, yes.
And can you please give a revision on the EBITDA per ton guidance for H2 FY24?
So basically, we are still, waiting for, steel prices to stabilize, because, there's a lot of fluctuation that has happened in last 6 months. And, we are still careful for next 1 or 2 months, because internationally the prices are still volatile. So, once this gets, we are targeting a 4,000 rupees per ton EBITDA, but, this steel price only has to stable. So that is all.
Okay, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Adesh from Motiwal AMC. Please go ahead.
Sure, thanks again. Just a simple bookkeeping question. So what could be our EBITDA per ton run rate in September, and, since October is already over, any sense on what EBITDA per ton you are doing in October?
So the October month, we have maintained, 3,000 plus. But, since, we are just, this is still going on. So on a quarter basis, we'll be knowing, in November, December, what it can be. But it is definitely moving, it is going ahead.
Right. And September, what was the number, sir?
Sir, it was in the similar price band, 3,000 rupees.
Okay, so September ended at 3,000 and even October is at 3,000. It was the first 2 months which actually led to some EBITDA dip, EBITDA per ton. Okay, so going forward, it should at least, it should sustain if there is no volatility in HR coal prices.
Absolutely, sir. Absolutely.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ved Desai from Nivisha Investment. Please go ahead.
Good morning, sir. Congratulations on the good set of numbers. I just wanted to ask that you talked about that when we increase our share of value-added goods, our realization will go up. So when we talk about value-added goods, are we talking in terms of the pipes or the sectors we cater to?
Good morning, Mr. Desai. So basically, when I refer to value-added products, so it will be mainly, our products, which are pipes and roofing and, going forward, special SKUs and black tubes, DFT pipes. So all those, these will constitute to our value-added products.
Okay. And apart from the government contracts, like we are seeing a huge capex from the government side. So apart from that, are we seeing any further capex to be initiated by the private sector as well, or it is just the government that will be catering to?
Sir, private sector is also contributing, like, 5G network augmentation is all private. The solar is all private. The affordable housing and the warehousing is all private. Bullet train project again, is a semi-private because the contract has been given to L&T. And all the metro rail projects is also like semi-private. NHAI projects are also the projects are going to the the EPC players and they are buying from us. So private sector is also contributing a lot. But yeah, you are right. There is a good scope for private sector to in future. They will also raise their volumes and their demand.
Correct. And is there any price escalation clause in for the private sector, or the clause is same for the government as well as private sector?
So it depends on the pricing, but it is a mix of both. If it's a long project, going to from 3 months to 6 months, then there is a price escalation. But if the supply period is less than 3 months, then the prices are generally fixed.
Okay. Yeah. Thanks a lot. All the best for the future.
Thank you, sir.
Thank you. The next question is from the line of Varun Arora from Safe Enterprises. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just one question. Could you talk about the cost initiatives that you are taking to drive the EBITDA per ton? It could be in form of your procurement of raw materials. What cost initiatives are being taken, and also if there are any levers to improve working capital post our Sanand facility kind of stabilizes.
Yeah, good morning, Mr. Varun. Thanks for your questions. So, the cost initiatives, they are on continuous basis. You are right, the raw material, since it is the biggest portion. So, as the volumes, they go up gradually. So, definitely, there's a raw material price, there's a optimization on the raw material price cost. Apart from that, on the operational front, we are utilizing, solar power. So, we have reduced almost, we saved almost around 2 crores per year on the account of solar power sector. And all the, the new machines and the new plants that have been set up, they have been set up with the world-class machineries, which give us the, the best yield in the industry. And working capital, we are focusing there. So, currently, the net working capital cycle days are around 40-45 days. So, we are, our target is to bring it to 30 days. But, there are a lot of other factors that come into play. So, I think that should happen gradually once the, the channel finance factoring that takes place.
And would we be in better position to get channel financing in place, once our volumes increase post Sanand facility?
Yes, sir. We are quite hopeful for that.
Sure. Just one bookkeeping question. What was the impact of, inventory loss this quarter?
Sir, this, I think I can talk to you after the results to assess the, the exact impact of this.
Sure. Okay. Thank you.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Good morning, sir. Am I audible?
Yes, sir.
Yes, hi. So, given the general scenario in the market, can you tell us how have you seen quarter 3 pan out so far in terms of the demand environment and other factors, and how they're likely to go on for the rest of H2 FY24, and also for the next year, if you can give a general outlook. And based on that, do you see the similar kind of growth rate continue, which you've seen in quarters ahead, year-on-year basis, and also for the next year? A general idea.
So, sir, Q3 and Q4 are generally, the one of the best quarters for the entire year. So, after this festive season, we see, strong pull in demand. because of the favorable, climatic conditions. So I'm quite hopeful, their Q3 and Q4 will, give us more volumes compared to H1.
So from a revenue and margins perspective, what we have seen, historically, like if not way back, just like in the past year or so, how H2 has always been more favorable in terms of revenue. So the kind of 18 to 20% growth, can you?
Yeah, we should be also in the same range.
On a year-on-year basis, correct? For the quarter.
Yeah, that's right.
Right. And margins are you're comfortable at these levels, or like?
Yeah, our conversion margins are intact, but the raw material prices, since they are fluctuating a lot, that is taking toll. But let's see, how this war situation and the commodity prices shape up.
But other than that, these are sustainable, 4%.
Yeah, absolutely.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Akshata Dev from Viva Commercial Limited. Please go ahead.
Yeah. Hello.
Yes.
Hi, good morning.
Yeah, hi, good morning, sir. So I just wanted to know a couple of things. Number one, what's the percentage of value-added products so far that you've done in H1 from revenue?
So in H1, our share of value-added products is around 29%.
Okay. And what are you aiming for the percentage of value-added products to be by the end of commissioning of the Sanand line?
So, our FY25 target will be hovering between 40 to 42% for FY25.
Okay. And so I would just like to know how are you having the confidence, or what is the strategy that you're looking forward to increasing the value-added products?
So we are adding new special SKUs. We have installed one, hot dip galvanizing facility in Secunderabad. We'll be venturing into, large diameter pipes through Sanand phase 2. We'll be coming in solar torque tubes in a big way. So, all these things, new applications, new products, the downstream facilities like galvanizing. So these will aid our higher, share of value-added products.
Okay. So have you received any specific orders or any intent of orders for the same, the new SKUs?
Yes, absolutely. As I said, solar torque tubes, there's a lot of excitement building around this area, because traditionally they were using open sections, but now, with solar trackers, the requirement for torque tubes is rising day by day. So that works in our favor, and Sanand facility is designed in such a way that, it can deal with any kind of demand from solar torque tubes from domestic and international markets both.
Okay.
So this is one example, and there are similar cases in other products as well.
Okay. And secondly, what I wanted to know that is the contract on Jal Jeevan prices, where it is difficult for you to, because it's a fixed base and you cannot pass on the cost, is that the reason that your EBITDA per ton is lower than your peers?
So in Q2, we had quite a sizable order book from JGM, and the pricing, the raw material prices, that played a spoil sport for us.
Okay, so you believe your margins should probably go up if the JGM size is not continuing?
Yeah. Now the prices seem to have rationalized and stable, and going forward we are sure to see this going up.
So in your annual guidances, do you expect a couple of quarters to have sizable JGM? So maybe, going forward till the contract continues, maybe there will be a couple of quarters with a dip. Is that possible?
Yeah, that is quite possible, because, the order traction is there, and, the prices have also, stabilized, as I said. And let's see.
Okay, thank you. That's all from me.
Thank
all
you.
the best.
Thank you. The next question is from the line of Anand Gulani, an individual investor. Please go ahead.
Hi, Anish. How are you? Congratulations.
Thank you, Anandji.
Anish, just a quick question for you. When we do channel checks and speak for ideas across, everybody is discussing the pipe sector, especially the one in you are operating in high tech. And assuming the demand is too high, there is definitely not much capacity in the system, which we have found from channel checks. And if your capacity commissioning doesn't go slow, hopefully it's on schedule, then is it fair that your guidance is on a very conservative side of an exit rate of 4,000 per EBITDA ton?
So, Anandji, last 1.5 years, we've seen extreme, volatility in the prices, in the raw material prices. So, our conversion margins are there, but then, the price, the inventory, the deterioration in the inventories, and, we're having good orders, but then, prices go up. So, all these, so I want to be, very, safe and, very, practical, considering the current situation.
That's fine. That is fine.
Coking coal prices, nobody thought, from $260 or $250, it'll go to $370, $80. This was totally unexpected. But then,
so only one thing, you don't expect any slowdown in the commissioning of the capacity ramp up?
No, absolutely not. Absolutely not. We are on track. We are on track. 1 million tons by FY25, we are very confident.
Okay. And just one last question, and you have done 18.5 crores in the first half, correct? Or 18 crores, am I right?
Yes,
the first 2 quarters. Anji, so Q3 being very for the sector, Q3, Q4 of the rockstar sector, we can expect a good, the ballpark growth number from first half or any exit?
Yes, sir, I'm quite optimistic, Q3, and Q4 especially, I think Q4 will be the actual, as you said, blockbuster quarter will be Q4.
Gee.
Once this, the festive season gets over, I think, then, mid-November onwards is actually, the work on ground that takes place.
Notice, sir. Chalo, I continue to proudly stand by from here.
Thank you, sir. Thank you.
Bye-bye.
Thank you. The next question is from the line of Jatin Damania from Swan Investment Managers. Please go ahead.
Thank you for the opportunity. So just wanted to understand, you were saying that you're hopeful of getting a stronger volume in H2 and you are largely focusing on the Q4. So are we seeing any headwinds in the Q3 or probably October numbers? Or, how are the things?
Generally, Q3 is, Q3 till festive season is normal, but then after festive season is actually, when the distribution, trade demand, that pulls up.
So is it fair to assume that the 45 days of this quarter, which is Q3, is largely subdued as compared to what we did in the last quarter?
Q3 is always better than Q2, but Q4 is exceptionally well.
Okay. And sir, last question. We had signed an MOU with the UP government. So, we were supposed to give an update during the Q2. So, what any progress that we are making in the states?
So, sir, we are, the government has, identified a few land parcels for us, and we are doing the due diligence of the, the railway connectivity for these land parcels. So that is going on, and let's wait for the ideal, outcome from this. So we'll be updating on the exchange once this land deal is done.
So what is our current order book and the proportion of the Jal Jeevan Mission in the total order book?
The current order book is in excess of around 250 crores.
Mm-hmm.
And Jal Jeevan Mission will be almost say 75 to 80 crores out of this.
Okay, so large portion of the Jal Jeevan is already executed.
Yes, sir.
Sure. Thank you, Anish.
But these are recurring orders. So once these supplies get done, we get with the top of orders.
Yeah, but JJM order comes with a lower margin, right? So if that execution happens, then definitely our EBITDA per ton tends to be again in the same line of 2,500, 2,700.
Yes, sir. But if steel prices do not go up, then then the EBITDA from this sector is also quite healthy.
Okay, noted. Thank you.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, hi sir. Just a follow-up from the previous participants on the Jal Jeevan Mission. So do you expect the order book, the orders to slow down from next year, given that it's an election, the majority of the work will be?
So sir, for FY24, for next 5 to 6 months that we are having, so the order book is strong, till March. So, for next financial year, we'll have to wait for, how the results and everything pans up. But I can give you, guidance till March. Till March, I don't think any slowdown in Jal Jeevan Mission till March.
Right, sir. So, sir, in case of any slowdown from this specific segment, does it impact your, next 3 to 5 years roadmap in terms of your guidance that you have given?
No, sir, then there should not be any change in the guidance because, there are many other sectors that will be opening up. So, we don't see any challenge, the volume challenge per se.
Sure. Thank you and all the best.
Thank you. The next question is from the line of Hetal Gada from Max Life Insurance. Please go ahead.
Hello. Good afternoon.
Hi, good morning. Good morning, Hetal.
Good morning, sir. Sir, congratulations for the good set of numbers. So just 2 questions from my side. Firstly, you were talking about, targeting 40 to 42% of value-added products in the next year. Can you just provide some breakup on what will be the, what will be the order book like in terms of structures, in terms of solar top tubes and all? Can you have please share some rough idea on it? The product mix, what you are targeting?
Yeah, so it'll, there'll be new segments that will be opening up for us in FY25. Solar top tubes will be one of them. The special SKUs like DFT pipes from Sanand Phase 2, that will be additional value-added product for us. The galvanized pipes, as we have increased capacity at our Secunderabad unit for galvanizing, so that will be one of those. The roofing volume is also going to grow higher. So we'll see share of VAPs in the roofing segment also to go up.
So within this, which is the most profitable or the highest margin product in the entire mix, or all these better margin products as compared to the commodity grade?
No, so all these products, they like fetch us EBITDA per ton in the range of 4,000 to 5,000 rupees per ton.
Okay, across all these products.
Yeah, yes.
Okay, and so given that we also are on, take government contracts and all, so how are we planning to manage our working capital, and what are we thinking what is your target working capital in terms of days? Because these projects will anyways require higher debtor days, but managing inventory and all, any targets that you have in mind?
So current our total net working capital days is around 40 days. And, we are targeting to bring down to 30 days through channel financing, dealer finance and all that, in all those.
Okay. So as peer, APL Apollo, they have completely shifted to zero financing and actually have just on cash model. Any plans to model that especially for your structural pipe segment, and not on the project one, but on the structural side?
Yeah, so as I said, the dealer finance is one one area that we are working on, and once this get materializes, I'm sure we'll be in quite competitive range.
Okay, and what is this? If I may ask, how much is our B2C share in the overall mix?
Is close to 70%.
And what are we targeting to get it to?
So, our B2B segment is also growing up and B2C is also growing up. So I think, the mix will remain more or less the same.
Fair enough. Okay, sir. Great. Thank you so much.
Thank you.
You're welcome.
The next question is from the line of Dheeresh Pathak from White Oak. Please go ahead.
Yeah, thank you for taking the question. Sir, in 1H
Sorry for the introduction. Your voice is very low, sir. Dheeresh, sir.
Is it better now?
Yes.
Sorry, apologies. Is it better now?
Yes.
Am I audible? Okay, thank you.
Yes, you are.
Thank you. Sir, 1H volumes, how much would be from Jal Jeevan Mission?
Sorry for the interruption. Dheeresh, sir, your voice is very low.
Hello, am I audible now?
Yes, sir. Can you repeat the question?
Sorry about that. Yeah, my question is, sir, in 1H volumes, what would be the contribution of volumes from Jal Jeevan Mission?
In H1, the total contribution was around 25,000 tons from Jal Jeevan Mission.
25,000 tons, okay. So would you have the numbers for FY23 also handy, sir?
FY23, sir, to give you a rough estimate, I think the annualized volume was around 40,000 tons.
40,000 tons. Okay, understood. So value-added products, you said you make 4,000 to 5,000 rupees EBITDA per ton. But what is the trade-off like? Do you have to invest more capital to make these value-added products?
So, Deji, galvanizing, we have to do coating on, on the bare black tubes and pipes. So, that is one area. But, Sanand phase 2 is entirely focused towards value-added products. So, the special SKUs, DFT pipes, large diameter pipes, API pipes, solar torque tubes. So, all these will come from Sanand. So, Sanand phase 2 is primarily focused towards value-added products only.
So, that I understand. So let's say you need to invest 100 in normal products in capex to make a plant which is 100% value-added products.
Oh yes, there is a substantial.
Will go up by how much time?
Yeah, there is a substantial difference between like the normal and almost 2x you can say for normal versus value-added products in the capex cost.
So EBITDA goes up by less than 2 times, but capital goes up by 2 times, right?
Yes.
Okay, understood. So in your working capital, when you are right now, is there any NBFC or bank which is providing financing to your dealers?
Yes, sir. We have just started. We are testing it. It is 25 crores currently, and so we'll see how this goes, and we can build upon this.
So only 25. The NBFC, which is providing financing to a dealer network, has a book of only 25 crores right now.
Currently, yes.
Okay. So what cash discount do you give to your dealers, and what is the typical receivable days without the cash discount?
So typically it is in the range of 1 to 1.5%. 1
to 1.5%. Okay. And what is the credit without the cash discount? Days?
30 days.
30 days. Okay. And the NBFC, which is having a book of 25 crores, at what rate do they lend to your dealers?
Currently, it is in the range of 9.5 to 10%.
9.5 to 10%. Can you name this NBFC?
I apologize for that, please.
Okay, no problem. Thank you for taking my question.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Vikas Singh for closing comments.
Thank you, operator. On behalf of Phillip Capital, we again like to thank Hi-Tech management for giving us the opportunity to host them. Over to you, sir, for any closing comment.
Thank you so much, everyone, for sparing time to attend our earnings conference call. To sum it up, and going forward, I would like to say that the steel demand has started ramping up now. Government mega capex towards infrastructure, railways, telecom, and various other prestigious projects are big demand drivers for our products over next 4 to 5 years. And we remain very positive and bullish about the India structural growth story. The company is well poised to cater any kind of demand that comes from any geography or any sector. With all these things, it is quite positive for the company in H2 and coming years. That is all from my side. Wishing everyone a very happy and prosperous Diwali. Thank you.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.